All right, day 380. We are live today. Today, we're going to continue adding to our BRRRR list. Now, if you remember what the BRRRR strategy is, it stands for buy, rehab, rent, refinance, and repeat. And what I've shown you in the past is we've been keeping track of all the sold property lists by zip code. But as you now have a pretty mature list of what's happened the last 6 to 12 months, I am now starting to track, well, what's coming on the market recently. So if you want to look at, hey, properties that are coming on the market, so I'm looking at properties less than 500 grand, properties that have come or been on the market for less than 3 days. I was able to find this property all the way up here for under 200 grand. And the reason I'm looking for 4 bedrooms is because I'm primarily looking for properties where I can convert a 2 or 3 bedroom to a 4 bedroom. Now, obviously, 2 bathrooms were probably more attractive, but this property looks pretty good. I went all the way to the top right. It's been on Redfin for about 2 days. Let's go ahead and write down some of these figures, right? Because at the end of the day, what you really want to figure out is, okay, if I am acquiring properties and I'm renovating them, what are the properties that are recently coming onto the market selling for? And that's because the BRRRR strategy requires you to force enough value so that when you do the refinance using a, let's call it a debt service coverage ratio, a DSCR loan, do your total cost incurred, meaning your purchase price, your rehab, your holding costs, do they all add up to be roughly around 70 to 75% of the after repair value or the ARV? Well, for you to get the ARV as accurate as possible, that's going to be highly, highly dependent on, frankly, what and how close you get to estimating the correct ARV. Now, in order for you to determine the best ARV, obviously, if you think about the perfect comp, right? Perfect comp would be you're looking to buy the property right next door to this property that just sold yesterday. And it was the same bedroom count, same bathroom count, same square footage, same year bill, same lot size, everything. But as your factors differ, right? Meaning, hey, what if this one has more bedrooms? What if this one has less square feet? What if this house is older, right? What's the condition of these homes? What are the lot sizes half the size? As those differentiating factors come into play, the risk of your ARV estimate based on that comp goes higher. So that's why it's really more of an art, not a science. So in this situation, that's why it's so important for us to keep track of what's coming on the market, especially on a dollar per square foot perspective, because now you can see what neighborhoods are these properties that you're coming on the market in and what's the condition of their home. So for this one at 245 13th Ave, it's coming to market for $190,000 and 1680 square feet. 1680 square feet. This property was built in 1970, which is kind of in line, plus or minus a few years. 10, 15 years, 190,000 grand, $190,000. So your price per square foot is going to equal to your asking price divided by your square footage. 113, that's kind of in line with everything. This was listed 2 days ago. So this was listed on 10, 12, 24. And the lot size here is 0.29 acres, 0.29 acres. That's pretty close to the other properties, all a little bit above. And single family home, condition of the home. So you can see that this property has a pretty much new flooring, new kitchen, new bathrooms, all modern, no carpet. Okay. So I can write modern, upgrades, new floor, light gray LVP, fresh paint, modern bathrooms and kitchen. Boom. This property does not have a garage, does not have a basement, does not have a way. And let's put in the neighborhood that this property is in. I typically just like to just look at the Redfin page, zoom out a little bit, and see where is the closest neighborhood. So this is right between Spring Lake and Morningside. Between Spring Lake and Morningside. So now that gives me context on exactly where these properties are so that as I get properties that come into my books, I actually know, okay, where are these other comparable properties? Because if you're looking at one property all the way in, let's say, Echo Highlands, but now you're buying a property in between Spring Lake and Morningside, that risk of a wrong, and I say quotes and wrong because there's no such thing as wrong when comparing ARV, but there's higher risk, right? Higher deviations from what you might expect a reasonable appraiser to actually look at your property, right? So obviously there's not investment on this. We're not soliciting any investments on the call, but that's how I add to this to my list. And now I'm tracking that, hey, it's in this area in between Spring Lake and Morningside. I'm seeing brand new modern properties come on market that have been recently renovated for roughly around $113 a square foot. So that's going to be really, really important as you think about your BRRRR analysis, as you get cash deals that might come across your plate and try to figure out whether or not you can actually pull back out all your deal. Now, I know that this is probably not going to be a deal if you were to buy it on the market, but we can just analyze this really quick. It won't take that long. This property was listed for $190,000. I'm going to leave my rehab $3,500 because I don't anticipate there to be any issues. I mean, I usually just leave aside $1,500 for the roof in case there's any issues with the roof that I can't see from the photos. I got $500 for some landscaping. I usually have these high pressure flush toilets that I like to replace the home with. That should be one of them, and that should be roughly around $3,000 for the rehab, which is pretty much a turnkey property. Now, for me to figure out what rents I can charge, I'm going to go to my affordablehousing.com. I'm going to go to the owner section, the market rent estimator. It's going to bring me to right here, and I'm going to copy and paste the address onto this page, and that's going to give me my bedroom count. Now, when I click on get estimate, the most important number here is going to be on the bottom right, where it says that the average rent for 25 units within a 1.39 mile radius is $1,438. So I'm going to use that number as my estimate for now. To get my rest of my expenses, I'm going to go get to the Redfin payment calculator. It says the estimate property tax is $149, so I'm going to put that right here. And then you have homeowner insurance of $147, because $147. I got 10% for my maintenance. That's 7% of my rent I set aside every single month for maintenance and just anticipating future expenses. Like I know for a fact that my roof is going to get replaced in 10, 15, 20 years. I know for a fact that my HVAC is going to get replaced in 5, 10, 15 years. Same thing for my water heater. So this is money that doesn't belong to you. And you want to make sure you're setting aside money every single month for this because guess what? This money doesn't belong to you. And you don't want to be the person that overestimates the profitability because you underestimate your expenses. All right, then you got 10% for property management, and then you got 5% for vacancy. So assuming I can get a loan for 20% down and F19, my down payment is going to be calculated as B4 times F19. That equals to $38,000. So my finance amount in K6 is going to be equals to B4, my listing price, minus my down payment percentage in E19. And I'm going to be financing this at 7% roughly. Using those numbers, you would be looking at roughly, assuming you can rent this property out $1,438, you'd be negative $229 in cash flow a month. That's a negative 6% return, negative 6. That's assuming you bought this property for 190 grand with a $3,000 rehab roughly at 25% down, 7% interest rate. So I always like to play around with this number. So what asking price do I need to buy this property at for me to yield, let's say, a 10% cash on cash return? If I go all the way to 100 grand, 105, watch what happens to my cash and cash. At 105, this would be a deal because now I'm yielding a 10.1% return, 10.1. Assuming everything else stays constant and your rent stays at $1,438, you're now cash flowing $224 a month with a purchase price of 190 grand with $3,000 rehab, 25% down, and 7% interest rate. Now, does this mean 10% is a magical number? No, but that's going to be dependent on your own portfolio strategy, right? There are people that just want to break even on the cash flow and simply say, well, if I'm buying $1 million property and I don't make any money on a monthly basis, but I'm making 5% appreciation, which is very risky, right? That's very speculative, but they might be making 50 grand a year in theory, right? Assuming nothing happens to the housing market, it continues to grow up, and you don't see any deterioration in the market value in whatever market you're in. That's why it's risky. It's not predictable, but some people have different strategies, and that's why it's important for you to talk to your own investment professional and figure out what and why would you buy this property, because you also have to take into account execution risk. What's execution risk? Well, is your contractor going to show up on time and do what they say they're going to do? What's the chances of them opening up the wall and realizing, hey, I got all these extra expenses and I found something behind a wall, and now all this piping is wrong. I got to replumb the entire house, blah, 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 blah. Well, all those are real issues. So you got to think about it. Is this investment worth the risk? And this was like 4%. You might say, hey, why would I on earth would I do that? For 4%, I mean, I could just go buy a 30-year treasury bond yield and probably get more for my bank more buck because I don't have all the extra risk associated with executing on a project, right? What if the tenant doesn't pay? So all of these are real problems. So that's why you got to go through these models and really figure out whether or not this is suitable for you. Okay. So I hope you all have an amazing Monday. I hope you all are able to spend some quality time with your family and friends today, because that's what life is all about. All right. I'll see you all tomorrow for day 381. Have a good one, everybody.